Hey guys, per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So who doesn't love some good backtesting results? So sorry, I don't know how to pronounce his name. He's been just pushing out a lot of great articles, great stuff that not many people are talking about, so give him a follow. But he recently did some TA versus buy and hold backtesting and found that MACD and EMAs basically were the best and everything else is kind of crap, including Stoke, sorry Nomad, including RSI. So I've always poo-pooed MACD, but maybe I should pay attention to it more. I assume this is on the daily, not the weekly. Obviously, depending on what you're using and your own personal strategies, what you're looking at, that's going to change, but this is just bare bones comparing these flat out. MACD and EMAs did the best outside of buy and hold, which is the whole point of TA. Can we time the market effectively? All right, so I got a lot of stuff to talk about, and that usually is the case when I don't have a clear picture of what's going on. I mentioned this the other day on Twitter just because I'm seeing a ton of these charts floating around. I'm not saying it's a bad idea as a whole, but in general, it assumes that if these cycles keep lengthening, we're basically going to be in an uptrend to the next halving and then a downtrend. Like the timing doesn't make sense. So I just figured out what the average rate of change was between these three and got 24.19. The target doesn't matter here. A lot of people probably saw this and was like, oh, 400,000. But that's not the point. The point is I'm illustrating, these are the halving dates. And what I'm showing here is that what we know is that halving is coming up May 2020-ish. That's an assumption. That's gonna happen regardless, sometime around 2020, whatever. What we don't know is the length of the cycles. So the past halvings have been pretty much smack dab in the middle of the uptrend from based on the RSI, not necessarily price. So that's from previous all-time high to next all-time high. So taking all that into consideration, like, it just doesn't make sense to say that the cycles are just going to keep getting longer and longer outright. Will it happen? Maybe. Do I think it'll happen? No, I don't think it'll happen. I think halving's going to play an important role, as it does in everything. Supply demand is critical for crypto. So if supply drops, demand almost inherently goes up, which is dangerous to say, I know. But for the most part, it's an actionable event that people are paying attention to, like LTC, which is what I'll mention later on. But in general, I don't think these are accurate charts, seeing these float around. Are we close to a bottom? Based on the chart, it's really hard to say yes or no. I don't think so, but you'll notice that weekly RSI has never been below 30. Not that RSI is a great strategy, thanks to that backtesting thing, but overall it doesn't just chill down here. Ideally we get a bull div, so a lower low in price, a higher low in RSI, and then that's all the buy signal I'll ever need. But until we're there, you can't say that, like, oh, this looks good for a bottom, and I'll get to that in the charts. So fundamentally with Bitcoin right now, we're getting a massive spike in transactions per day ever since April. It's just been a rocket ship ride up. Initially, I had no idea what the hell was going on. A lot of people didn't. We were just talking about this saying, wow, this looks like value here because everything else is basically going down or flat. If you look at ETH, if you look at LTC, all this kind of is just stagnated, flat, or down. And in alt cases, almost everything is just down, 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 down. If you look at some of these alts, it's like 14 transactions a day, and it's like you're worth millions or billions of dollars. Why? But anyway, so transactions going up. Why? Who knows? Until we found out, oh, they're using this thing called Veriblock, which is basically bootstrapping Bitcoin security onto other blockchains. So the whole premise is really odd to me, and some people see it as an attack on Bitcoin and transaction spam. It kind of is what it is, because Bitcoin is a permissionless open ledger that anybody can use for anything they want. So either we as a community have to say, something's going on here, we need to investigate this, we need to make a decision, we need to take action, or just let it be. The point is, eventually we're going to see block sizes creep up to levels that are not great for the fee market. That's, if organic transactions were higher than they are now, plus Veriblock on top of that, which is at least 25% of these transactions. Things may get hairy in the next 6 months. Again, we'll see. Now, I don't think Veriblock is using SegWit. It's one thing they could do to make things better for everybody involved, or just cease to exist. I don't know. Like, I don't know much about it. I know spec miners are into it. I mentioned it on Twitter, and there was a giant spec mining uprising. Generally not a fan, but it is what it is. You know, you can't do anything about it. All right, so let's look at some charts, some peripheral stuff. When Tether is down below $1, the market rate. This isn't the peg. This is the market rate. I repeat, the market rate, not the peg. This is the rate at which people are selling it on the open market on Kraken. It's below $1. Generally not bullish. Generally says that there isn't enough Tether demand. Why you'd be selling below $1, I don't know. But it just says that the market as a whole has come to a consensus that crypto isn't going up. I'm going to dump my Tether for USD and sit in that. I don't really know how else to rationalize it other than that. The books are thin, maybe. I don't know. We're not seeing a rise in premium, so this is Coinbase versus Bitfinex. We're not seeing a rise in premium, so this isn't like a mass exodus out of Bitfinex. This is just people selling Tether. Hard to really know what's going on almost until after the fact. There hasn't been any media articles or anything to like scare people or FUD people. It just is what it is. I think Bitfinex is fine. I think Tether is fine. We're just seeing a rotation out of Tether right now for who knows why. Maybe it's just coming back to equilibrium. It was almost at $1.02 for a while. And that's certainly more bullish than 98 cents. But in general, we want it just, flat and happy at $1. All right. Bitcoin Weekly, said this before, the cloud looks like a picture. If I'm looking at a chart and I'm not paying attention to anything, the ticker, whatever, if I look at this, this is screaming to me, don't go short. May take a while, 6 months to a year, to figure out the reversal, aka like it did here, i.e. whatever. But you're seeing this massive TKC clamp, you're seeing this massive flat Kumo at 10K. So, again, in a vacuum, reading this, 5K, 10K would be the targets. 5K is the Tenkan, 10K is the Kijun, no, sorry, the Kumo. And you can see this took 6 months to a year to figure itself out previously, 2015. This is probably the most bottomy looking chart that I can present based on cloud, based on candles. There's nothing here that screams reversal to me. There's no candle or chart pattern that looks good at the moment. But through the year here, we will see the same thing we did here with this blowout of the cloud. If we continue sideways, the flat Kumo will just get longer and longer and longer. You'll get Wyckoff vibes down here like we did in 2015 and yada, yada, yada. So history may repeat itself. I'm not a big fan of like comparing fractals or like this was 30 days here, this is 30 days here, blah, 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 blah. I'd rather just take it as it comes, look at the cloud, and it's just showing a massive, this is the widest TKC clamp ever on anything, which just says that we fell really fast without pulling back up basically to mean, which is currently at 11K. And you could argue this was a bubble, it's meaningless, just going to keep dying. That's fine, whatever. But I'm just looking at weekly cloud. One option for reversal is inverted head and shoulders. Again, super early. This is months away. This would be basically a lower yearly low, another shoulder, and break 4K, go to 5-6 or something. I don't know. Months away, something to consider if we do break lower lows, to watch for that. On the daily, there is a bit of a falling wedge situation, which is a reversal pattern. Target for that would be 4.7. I think it would struggle to get above 4.1, but we'll see what the volume looks like. Whenever you see descending volume, always look for a chart pattern, which kind of points to consolidation as a whole, if they're all hand in hand. Descending volume, chart pattern, we make a decision. We have a big drop, we consolidate, we make a decision. The mass trading consciousness decides what's going on here, and right now we're sort of painting a reversally tight pattern, but it might fail, just like this messy, gross head and shoulders inverted failed dramatically here. Another messy pattern potentially would be Adam Eve. Looks much better on ETH. I'll show that in a second. But again, descending volume profile ever since the drop. You get your atom left, which is a V, then you get your ETH, which is a U. On legacy markets, traditionally the V and the U are the same level. On crypto, almost every time the ETH is slightly higher than the atom. So that just says there's a higher low than the atom. Looking at the cloud alone, you can see we got a TK cross recross, which is generally mega bearish below the cloud. Based on the trend, you'd expect this to go lower. The pattern's a bit of a hopium right now. You'll know much more when we're into March, basically, what's going to happen. This is just illustrating the edge-to-edge potential with the Adam Eve breakout. Again, this isn't what I think is going to happen. This is an if-then statement. A lot of people see charts and they think, oh, he thinks it's going up. Well, not really. I'm saying if we get to this point, the probability that it goes up is much higher. And this flat Kumo helps give that credence, again, much like the weekly or any time frame really. Anytime there's a long flat Kumo, that just says there was a big drop or there was a big pump and it went flat, went sideways. So the probability of a 50% retrace increases dramatically, and that's what the 5K would be. The downside target, if we do break lower lows, which if we go lower, I think we will. I don't think we're just going to stall at the previous yearly low. We're looking at 2,400-ish on Coinbase. That's just a simple 1618 of high to low here. All right, for ETH, you can see the V is perfect. Just a massive drop, massive recovery, and then a slow decision here. This Adam Eve looks much more convincing. The Eve is basically halfway formed. As much as I'd love to see ETH go below 50 bucks, I don't think it's going to happen anytime soon. But again, like Bitcoin, if this does break lows, it's not going to stop at 76 this time. I think it is going to go to 50 if it breaks lows. Again, that's an if-then statement, not like, I think I know where this is going, I'm bearish, blah, 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 blah. That's pointless to me. Like, I just need to figure out what are the possibilities, what should I be doing when things happen. So you could start buying here on high risk. Massive reward, obviously, but there's nothing pressing to me that's saying like buy. It's just saying, well, watch for this pattern, wait for this pattern. It looks pretty good so far. It can always stall at 165 and go to 0. But if we get to Adam Eve, that says there's a really good chance of further upside. I think if we do get further upside, it's going to stall around 200, 210. And the roadmap up for ETH is really simple just because there's been so many consolidations and breakdowns. 378 is kind of Bitcoin 6200. 378, I'll show it on another chart, but it took months to break up, took months to break down. It's not going to just shoot right through there. Daily Cloud, you can see, has just been bearish the entire year, all of 2018. Again, we're getting a bearish TK cross below the cloud in a vacuum, super bearish. You expect this to go lower. If you see that 100 times out of 100, it just says short it. So that's the counter to the Adam Eve narrative. Based on the trend, you expect this to go lower. The Adam Eve, putting it all together, is basically the flat Kumo cloud. So if you do get a successful Adam Eve here, you'd get a Kumo breakout, which would be just another way of saying go long. It's time to start getting in longs at that point. So again, here's that 378 level. Just took a while to break up, supported, and then just died from there. Another thing to pay attention to with ETH, if we do go lower, is the Maker DAO collateralized debt positions liquidation levels. So DAI is a stable coin that you can use ETH to basically convert into, and all of these have various liquidation based on the amount of collateral you're using. So the big one is 3228, which is currently liquidation price of 96.52. So if ETH goes below that, it gets liquidated. Now this CDP can add DAI, remove risk, add collateral, blah, blah, blah. So it can like mess with this a little bit. But if it goes much lower quickly, then it's just gone. And then it gets kind of sold into the open market, basically. And there's more on that in the BraveNewCoin article. I'll link that below in the description of the video, should you be interested. And lastly, let's look at some Litecoin stuff. The network and the fundamentals don't look great. Again, if we're looking at transactions, you can see they're basically flat or declining. So overall, that's not a bullish picture. But the chart, however, fundamentals, which are kind of, to me, the most important thing. Like if I'm on a deserted island, by myself, coconuts, volleyball, the whole 9 yards, tooth abscess, I just want to look at the chart. I don't care about the news. I don't care about anything else. The chart, to me, tells anything more than fundamentals can. So based on the USD pair, you can see we had this massive downtrend, perfect pitchfork, no shenanigans, support, resistance. It's at this resistance point again, and it's at the cloud again. This is a decision point to go higher. It's not saying go long. It's saying this may be a time to pay attention point. So if it's above the clouds, Kumo breakout bullish. Currently not telling you to go long. It's just saying it's perhaps on the end of its bearish trend. And again, like everything else, it just was bear the whole year. Now, if you look at LTC BTC, it's probably the most bullish thing next to like BNB BTC. Massive Kumo breakout since January. So it's been a month above the cloud, clearly ending its downtrend. The 50% retrace for this is 0.016 from high to low. So that would be like the 6 to 12 month target. Two other things to consider for LTC. Again, I'm not a massive fan of LTC as a whole, but from a speculative play, potentially pretty decent. Having coming up 184 days, that'll fuel any speculative drama. And then maybe Charlie Lee's thinking, I don't know what he's thinking. I'm speculating that they're talking about doing some important protocol stuff on top of the halving, which will fuel the speculation even further. All right, that's all I have for this one. Like, dislike, comment, share, subscribe. Let me know how much of an LTC maximalist you are in the comments, and happy trading.